Good evening, everyone. Welcome to the 29th episode of ICC Biz Live. We have with us to to state of the world chartered accountants who will converse on GST and sales tax. I will briefly introduce them, and then they will converse among themselves. You can post your questions, whatever you have during the conversation. First is I'll introduce CA Rohit Surana. He's a partner at Tejas Spire LLP and RSP and Associates. His educational background: BCom, FCA, CS, IAM, AA charter holder, fintech, and blockchain. His his past association is with DB Desai and Associates and Berger Prince, and he has 15 plus years experience in the field of finance and taxation. And he's founded this CA firm in 2009, which has grown from strength to strength, serving more than 100 clients with a team comprising 30 CAs, MBAs, graduates. His segments are corporate structuring, management consultancy, and external CFO, taxation, direct, indirect, and international, private equity, mergers and acquisitions, due diligence and valuation, and investment in startups. And let me now introduce the person who will be conversing with Rohit C.S. Unayana Bantia. She is a BCom and a chartered accountant. She has around 7 years experience in the field of indirect taxation. She is proficient in handling the department litigation and indirect tax matters. She acts as a GST consultant and is involved in providing advisory and litigation support from appeals. So with this, I retreat and I hand over the mic to Sunayana to start conversing with Rohit sir. Over to you, Sunayana.
Thank you so much, sir. Hello, everyone. Welcome to today's episode on ICC Biz Live. Today, we are going to talk about a topic which creates curiosity and has always been a matter of discussion, that is GST implication on post-sale discounts. So many suppliers have been giving discounts in the form of incentives, early cash discounts, free vouchers, but the GST implications on it has always been a matter of discussion. And with the recent notices coming up, there's always a hula hoo on this matter. So first of all, Rohit sir, we would like to understand what is post GST discounts, how is it different from a regular discount, and what are the GST implications on it?
Okay, so consider a scenario where there is a manufacturer or a brand owner and there is a dealer or a distributor. So three kinds of discounts can flow when we have this kind of relationship. One discount could be when, let's say, I am a manufacturer or a brand owner and I am selling to a dealer or a distributor. So I can give a discount at the time of sale. So dealer comes to me, he buys, let's say, 100 quantity of something, let's say television, and the MRP price is, let's say, for 1 lakh rupees, I give him at 90,000 at discount. So at the time of supply, I give him that discount. That is one kind of discount. The second kind of discount is that I tell him, boss, if in a year you take 10,000 pieces from me, I will give you further 5% discount. So this discount will happen only when he takes, 10,000 pieces from me. But this discount is announced at the time of first supply. The third kind of discount would be, which is not announced at the time of first supply, but later on I decide ki bhai from 90,000, I reduce the price further to 85,000 and I give him a 5,000 rupees credit card. So there could be a 3-stage discount. Now post-supply discount or secondary discount is nowhere defined under GST laws. For the ease of reference, let us understand that post-supply discount or secondary discount is something which is announced after supply of goods. Right? Now,
So
your question was, what's the hula hoo about all this? Right?
Yes.
What is happening practically, Sunena, is, let me explain the GST law first. But if you understand in a very simple way, let's say I sold goods to you at worth rupees 100. Okay. After supply, after raising an invoice of 100 rupees, let's say 15 days down the line, I give you additional 10 rupees discount. So what will I do? I will give you discount 10 rupees. I will charge GST there. So first I charged 100 plus 18% GST. Now I'll give you discount 10% plus GST. So my net liability is what? GST on 90 rupees, right?
Correct.
Now, when you buy that goods, first you bought it at 100, you got an invoice of rupees 80, then you got a credit note of rupees 10 from me plus 1.8 rupees GST. So you should also take that, GST of net 18 rupees minus 1.8, 16.2 is what you should take. So first hula goose was that, I am reducing my taxable liability by 1.8 rupees. So you must also reduce your ITC by 1.8 rupees. Now 15.3b gave certain conditions. One of the
Hmm.
condition was that the recipient must reduce his input tax credit. Only then I will be allowed to reduce my tax liability.
Okay.
Now there was no mechanism under GST where department officers could check or supplier could check that how they are, whether they are the recipient is taking credit of 18 rupees or 16.2 rupees. Whereas I am paying tax after adjustment 16.2 rupees. So there was a lot of hula.
Absolutely.
Another hula that happened was a circular came in which reiterated the definition of consideration. What is consideration? You consideration is something which includes whatever I pay to you for inducement of supply. To explain it in simple terms, I as a manufacturer, I give you a discount of 10 rupees more and I give you a condition that was तुम ना customer को 10 rupees discount दे दे, I give you further 10 rupees discount. Now
Yeah.
whether this discount is actually a discount or a consideration for supply of services given by dealer to me. So I'm sure during the course of your discussion, you would have a detailed questionnaire on this and we will discuss it more. But these are the two hula hoos which is going around in the market and a lot of people has faced a lot of notices.
So, from what I understand, the primary concern was if a supplier is giving you a GST credit note to pass on certain discounts, the recipient must reverse the proportionate ITC, right? If you get 10 rupees discount credit note and 1.8 is reversed in that, you reverse that ITC. But what if I get a commercial credit note where no GST is being reversed by the supplier? Whether as a recipient, I am supposed to reverse the ITC, or can the department question me that you must reverse the ITC even if I don't have a document on it?
See, this question has three parts. Okay, you have to understand this very clearly. 15.3b of CGST Act clearly says that you can reduce the value of taxable supply only if certain conditions are satisfied. What are those conditions? Condition number one is that discount must be announced on or before supply. Second condition is that there must be an agreement where on fulfillment of certain conditions, I'm going to give you the discount and it should be linked to invoices. And the third condition was that the recipient of supply must take ITC after adjustment of credit note. This was the law. Okay. Now, second portion that you have to understand is there is a principle of revenue neutrality. What is revenue neutrality? It is simple. As a supplier, if I pay 10 rupees to the government, the recipient will take credit of 10 rupees. If I pay 8 rupees to government, the recipient will take credit of 8 rupees. So in the entire chain, the government gets what it is supposed to get as tax.
Right.
Okay. Now, I have always believed that when this principle of revenue neutrality is established, accepted principle in law, whether I issue a GST credit note or I issue a commercial credit note is purely my business decision. Now, let us differentiate. A GST credit note is something which has GST adjustment, and a commercial or a financial credit note is only with the value of discount and not with GST adjustment. Now, you
Right.
understand that, let's say, I supplied to you at 10 rupees, charged you 1.8, and I deposited 1.8 to government. You took credit of 1.8 rupees. Now, at
Yes.
the time of giving discount, I reduced it by 2 rupees. Now, if I do not adjust GST, you take full credit because I have paid 10 rupees ke upar GST. If I adjust in
Yes.
credit note, you take lesser ITC because I have reduced my tax liability, your ITC will be refused. As long as this revenue neutrality is maintained in a transaction, it does not matter whether I issue a GST credit note or a commercial credit.
Okay. So I believe this answers our first question, that the recipient is to act on what supplier's actions are. He's just a responder. If the supplier is reversing the credits, reversing the ITCs, then we are supposed to reverse the ITC. If he's not reversing his output liability, we are just supposed to, book our discounts, right? So this answers our first question. I believe there has been a circular recently issued which clarifies this matter along with two other matters, which I would like to again emphasis on. First of all, like you had also mentioned earlier, if a manufacturer is giving a discount which is linked to its end customer, for example, if I give you, if he's supplying to the dealer कि अच्छा ठीक है, you pay 10 rupees extra discount to the customer, I will reimburse that to you. So whether that extra 10 rupees which he is getting from the supplier, is it a part of his consideration and is he supposed to pay GST on that amount?
See, I think you are referring to circular number 235, which was
Yes, sir.
issued very recently. See, there are two different transactions. I think we are clubbing, or the circular has clubbed these two transactions into one. There are two different transactions. One transaction is where I, as a manufacturer or a supplier of goods, is giving discount to my dealers.
Correct.
Okay. This transaction involves only me and the dealer.
Yes.
Dealer is selling the goods in the market which belongs to my brand.
Right.
Therefore, I might go one step ahead and ask the dealer to do something which will increase the sale of my goods at the customer's hand.
Right.
So two different transactions is something which we must very clearly understand. One is only between me and my dealer. And I will take examples.
Right.
For example, I give my dealer ki if you buy 10,000 pieces, I'll give you 5% discount. If you buy 20,000 pieces, I'll give you 20% discount. So in this particular transaction, what is happening, Sunana, is that this discounting is between me and my dealer. The dealer
Right.
benefits
Only two parties.
from volumes, from lifting volumes. The dealer benefits. So it is like buy more, get more.
Right.
Another
Right.
example is that if I tell a dealer that normally your credit period is 45 days, but if you give me payment within 15 days, I'll give you 5% cash discount.
Right.
So here also, it is between me and my dealer or distributor, and my dealer or distributor benefits by paying me early. Now, this is one leg of the transaction where I'm giving him discount or an incentive, right? Now, let's move on to another leg of transaction where I tell my dealer that, boss, you are selling my goods to final consumer at, let's say, 100 rupees today. Please reduce your price by 5 rupees. Start selling in 95. What could be the reason for my saying so? Because I am gauging from market that my competitor, same product, under his brand name is selling at 95 and I am selling at 100. Therefore, my product is become expensive. You kindly reduce the price by 5 rupees and I will compensate to you that 5 rupees by way of discount, incentive, credit note, whatever.
Right.
This transaction is not discounting. This transaction is that I am asking him to reduce the price so that my supply can increase to customer. So whatever discount I'm giving is an inducement of my supply of goods to customer. And he is merely acting on my behalf. That, acha, I, as a dealer myself, I would have sold at 100 rupees, but you are telling me to sell me 95. Okay, I will sell at 95, but you compensate this 5 rupees. Then there is a supply by dealer to me. What is the supply? He is increasing the supply of my goods. And that 5 rupees that
Correct.
I'm giving him as discount or incentive, whatever name called, is an inducement for such supply. So if we treat
Okay.
these as two different transactions, then our head will become very clear. First leg of transaction, where it is only between me and my dealer, the principle of revenue neutrality will come in. What if I charge GST?
Right.
He will take adjust the credit note and take ITC accordingly. If I give commercial credit note, he will take full ITC, but the value will go down. That transaction is over. This transaction is where he is doing something on my saying. Then that is a supply that he's giving for which I am giving him consideration 5 rupees. Then he is supposed to charge GST on that 5 rupees. So the agreement that you were
So dealer's
mentioning, the
consideration
circular,
is basically 95 plus 5.
yes, the
Yes.
circular 235 that was issued, that clearly says that if there is such agreement which establishes this
Okay.
fact that I am giving that 5 rupees for that inducement of supply, then there is
Right.
a supply by dealer to me, supply of services by dealer to me, and that 5 rupees he must charge GST and I must pay it to him. So these are
Okay.
the two legs of transaction. So if I'm sure you are reading 235 one circular where it is all under one circular and both considerations are known as discount. But for ease of understanding, you divide the transaction into two parts.
Right. Then we identify that there are two different supplies, but for a dealer, you have to tax at 100 rupees, 95 plus 5.
Five,
Right.
because
This
5
is this
rupees I'm
has been
giving
a
him
major
extra for that
clarification.
supply. Yeah.
Correct. Correct. So I hope this clears another major confusion. And what is the purpose of this circular is that clearly distinguishing the type of transaction you are entering into. You cannot have a single formula for all the kinds of discounts you are providing. You need to judge each transaction, understand its nature, and then apply this circular and take GST implications. Right. So moving on, Rohit sir, there has been another circular, and I would like to emphasize on one of the conditions of Section 15, wherein it says that ITC has to be reversed by the recipient for a supplier to reduce his output liability. Recently, in last year's budget, also, there has been changes in Section 34 of credit notes, which says there is an additional conditions on credit notes that you will be allowed a reduction in your output liability only if your recipient has reversed the ITC. So, what my question herein is that has this condition always been there in the system? Because up till now, what we have seen practically that the recipients are receiving notices, whether that they have reversed their ITC on a credit notes issued by the suppliers or not. But from what we feel that now the burden has been shifted to the supplier's end, that his liability will not be allowed to be reduced unless the recipient reverses his ITC. Also, how is he supposed to ensure that this is being done? Is it practically possible for him to, speak with each of his recipients and get a certificate that, Acha, you have reversed your ITC, please give me a clarification on it, and only then he'll be allowed to do it? So, how is this working practically, and how are businesses going to take steps to ensure that this condition is being fulfilled without actually, hampering the regular operational transactions?
So Sunana 15.3b had always cast a responsibility on the supplier. If you read the language clearly says that the supplier will be able to reduce the value of taxable supply if the three conditions are satisfied. So it is
Right.
always on the supplier to reduce the value of taxable supplies. And condition carrying forward is that if the recipient reduces the ITC, so I will be allowed to reduce the value of taxable supply only if my recipient also reduces the ITC that it takes. So 15.3b,
Right.
if you read, it was always on the supplier, right? Now, what happened was that how will supplier ensure that my recipient has reduced ITC? That mechanism was never there. So what used to happen was that supplier was audited. That was please show me whether your recipient has reduced your ITC because you have reduced your value of taxable supply. And as supplier,
Correct.
we would always submit that. Uh, this has to be this whole section has to be challenged in its validity because the execution facilitation rule is not there as to how I will check whether my recipient has reduced. Should I go door to door knocking on all my recipients if whether they have reduced it or not? So that facility was never there. But the principle of law was very clear that we will follow revenue neutrality, that if you reduce, recipient has to reduce. If you don't reduce, recipient will take full credit. Then came a circular 212, circular 212, all right, which brought this facility in place, that how will a supplier check?
Correct.
So then it brought in that if the tax amount involved is less than 5 lakh rupees, you take a certificate from recipient that he has reduced his ITC. If the tax amount is more than 5 lakh rupees, you request a recipient to give a CA certificate that they have reduced the ITC and therefore we will allow. So that was the timeline, right? Now, what was happening is that in 2A, 2B, recipient was asked a question that there are so many credit notes which are visible, whether you have reduced ITC or not. And supplier was asked question in assessment that you have reduced your taxable liability, give me a certificate of CA or recipient, whether they have reduced it or not. So that
Yes.
litigation continued. Now you know that section 212, circular 212 is rescinded. It has been withdrawn. Primarily because now we have IMS facility. You know IMS facility, how it works is that uh, all the invoices and credit notes have to be accepted or rejected or kept pending. So if there is a credit note and the recipient has accepted that credit note, then supplier is allowed to reduce tax. If it is rejected by the recipient, then the tax liability is again added to the supplier. So now that
Correct.
facility is there to do it uh, accordingly, but keep in mind that the primary responsibility of reducing the tax liability is with supplier, and therefore he has to check. And that is what section 34 also says, that recipient has to reduce the ITC in order to supplier to reduce their taxable value.
So I believe this is an additional burden on all the suppliers, whether the recipients are accepting their credit notes in their respective IMSs or not. So
Absolutely.
this is creating another burden to all the taxpayers to every month check whether the recipients have accepted and to ensure they have accepted. Because if not,
Yes.
it is going to be added in their GST 3B outward liability, and it's going to be another reconciliation, and you might have to again pay taxes on it.
Correct.
So correct. So the solution currently in this matter is basically just to ensure streamlining between the buyers and the sellers, that whatever credit notes are we issuing, that has to be discussed and then issued so that this rejection in IMS situation do not arises, right? Or do you
Yes.
have
So
anything?
basically, it's a commercial arrangement between the supplier and the buyer. In rarest of
So,
rare
but in
occasions,
most
the
practical situations, we have seen that suppliers issues credit notes, but the buyers do not accept it, and there has been a conflict between that. And so, this credit notes are always a matter of discussion. It's not just that if you issue a credit note, the buyer will accept it in all the situations.
so yes. So for example, when a supplier issues a credit note in respect of discount, it is always to reduce the price. Now the buyer may not agree the price reduction. For example, I have reduced price by 5 rupees and the buyer was expecting a price reduction of 10 rupees, and therefore the credit note may be pending. So in that case, the buyer should mark the credit note as pending. And
Correct.
when the supplier receives the notification on IMS portal that the buyer has marked the credit note as pending, the supplier should take initiative as early as possible to talk to the buyer and resolve this.
Correct. This has also been a very recent update in the IMS portal to keep credit notes as pending. Until now, we had only two options. So this has also been a
Etc.
welcoming step on the part of the department.
Yeah.
Correct. So, so with all these changes and clarifications, what do you think? How which sectors are going to benefit the most with all these clarifications, and what are the steps as a supplier and a recipient? What are the steps we should take to ensure it, be it documentation wise or be it the how the situations are to be handled now?
See, uh, the sectors benefiting from this clarification would be one where you have more of a dealer, distributor, and a customer model. So,
Right.
for example, FMCG, uh, all the retail stores, For example, all the MBOs, uh, the exclusive business outlets, the malls, so retails. So these are where there's a lot of interplay of discounts. Uh, that is where this should benefit. Uh, the other way is where there are three registered people. For example, even the manufacturer, the dealer, and the ultimate recipient is also a registered person. There also it should benefit. So, for example, some B2B supplies or uh, B2G2B supplies. So all those supplies should benefit because now there is absolute clarity that whether you issue a financial credit note or a GST credit note is largely between parties.
Correct.
When you want to issue a GST credit note, ensure that you follow Section 15(3)(b). By the way, 15(3)(b) is proposed to be amended. There's always already a press release where the condition of agreement and invoice tagging is supposed to be done away with, and this press release should culminate into law by this budget. So all these areas, where there was this kind of regular transaction, is something where this industry will benefit from this clarity, and the litigations should come down. Uh, See, the whole responsibility, if you see, of documentation is largely from suppliers end, because supplier initiates the credit note. The supplier initiates reduction in value of taxable supply. The recipient is only supposed to react. If the supplier does
Correct.
not reduce his GST liability, it takes full ITC. If supplier reduces his GST liability by credit note, the recipient takes lesser GST, adjusts the credit note. So recipient is supposed to react. So the
Correct.
supplier has to be very clear. One, it has to decide that whether he will issue a financial credit note or a GST credit note.
Come on.
So commercial credit note. Uh, that condition of 15(3)(b), whether he's complying it or not. Third is that he must check IMS portal whether the recipient has acted accordingly. For example, if I have reduced my liability, they've accepted it, or if they've rejected it, my liability gets increased. So be very, very live in terms of how recipient has reacted to that. Talk to them and adjust liability within 2 or 3 months immediately. So I think supplier has to be one very clear with uh, documentation, compliance of 15(3)(b), and how recipient reacts. My additional suggestion is that whenever you give any discount, you put that in writing.
Correct.
So what are the conditions on which you are giving discount? What recipient is supposed to do? You put everything in writing so that the department also becomes clear, the recipient also becomes clear, and the whole action takes place based on that agreement. So my humble suggestion is that in all cases of discount, you give a agreement, which could be the guiding force for deciding the taxability, and even department can act accordingly.
Correct. So this is the major takeaway from this discussion is that whatever discounts we are giving, please put it on writing, make an agreement or just an MAU that these are the conditions and whether we are complying with 15(3)(b) or not, and how are we issuing the credit notes, whether a financial or a commercial credit note is issued. So that stops all the litigations or the questions from the department. So, in light of this discussion, I would also like to understand that we have seen in the past that many recipients have been receiving notices from GST department because this discounts or incentives which is being provided are usually parked in the income side of their PL account, right? And in which they have not been paying GST on it, neither the ITC has been reversed. So we have seen a lot of cases wherein the recipients are questioned, why have you not paid tax on it? Why have you not reversed the ITC on it? So how are we supposed to handle those past cases which is ongoing in the court?
So
Litigations will be a little less because of the clarity which has come. But how should we deal with the past cases now?
now see, one thing is very clear, that mere accounting treatment does not decide GST liability.
Absolutely.
Whether I show discount by reducing my purchase price, or I show it as an income, does not really determine my GST liability. The GST liability is to be determined according with the law and principles provided under the GST Act. The law and principles are very clear. Now, if I have given you a discount and the transaction is only between my manufacturer and dealer, then recipient is to react based on what treatment the supplier has done. All right. Now, for
Yes.
example, I have given you a 10 rupees discount. I have reduced GST liability. You are supposed to reduce GST liability. If I have not reduced GST liability, you are not supposed to reduce GST liability, irrespective of whether you show it as reduction of purchase price or as income.
Correct.
However, when the transaction involves three parties, where I am requesting you to do something for the customer also, in that case, if you show it as income or expense, the GST liability is there.
You have to
Does
pay
not
tax.
matter whether you show. So it is the nature of transaction which determines not your accounting treatment. That is one. Second, Sunana, there may be so many cases. I mean, we spoke about uh, inducement of sale, where I'm giving you discount and I'm asking my dealer to give discount to consumer. All right.
Correct.
There could be multiple cases also. For example, I'm sitting here in Calcutta and I have a dealer in Bombay. And I tell him, boss, I'm giving you a budget of, let's say, 5 lakh rupees. You please undertake marketing activities on my behalf. Please put
Yes.
5 hoardings where you mention that my brand is there. And I will give you a credit note of 5 lakh rupees. Okay. Now, this is also something where, I'm asking my dealer to do something on my behalf. There will be a GST liability on that. As opposed to dealer is taking local area marketing to increase his own sale, where I have not asked him, ki boss, you do local area marketing, but he does it on his own accord. Then there is no GST. So this distinction is something which everybody must understand, that whether the transaction involves only me and my dealer, so I do anything which benefits the dealer, his sale, or reduces his cost, or increases awareness of dealer's presence, it is between me and my dealer. But when a third party is involved and my dealer is facilitating that, then there is a supply. And then there are consideration, whatever I pay in whatever form, discount, incentive, credit note, another goods maybe, that I'm giving you one good free. All this will attract GST.
So basically, if the dealer is acting on instructions of the supplier, then it's largely an inducement of supply, right?
Yes, because it is
So
ultimately for my
we have seen
benefit.
revenue officers not accepting this stance primarily. I hope that after this circular and clarifications, this would be a better situation, and they might be taking actions on
See,
that
that
basis.
that is why I'm insisting that under all circumstances, you please enter into an agreement.
Correct.
Let that agreement be your guiding force. See, your audit may happen 2 years, 3 years, 4 years down the line. But if you keep an agreement today between you and your dealer and you act accordingly, whether it is accounting treatment or GST treatment or filing of returns, 3 years down the line also when department comes to you, you can simply show this agreement that this was our agreement. So that is why I'm insisting that please, whatever the circumstances, have a.
Absolutely, absolutely. So we are almost at the end of the discussion. I'll just brief what we have discussed today. Firstly, it has been clear that a recipient is merely a responder. He's only acting on the basis of the documents which is issued by the supplier. However, if he is acting on the directions of a supplier, doing certain activities like brand promotions or giving additional discounts to its customers, acting on behalf of supplier, then he must be that should be included in his supply. So this is our primary takeaways. And the major thing which we should ensure is please make an agreement, whatever is the situation, whether you issue a GST discount credit note or a commercial credit note, it might be the prerogative of the supplier. But as per the situation, we must always document it to avoid future litigations, right?
Yes,
And
and
equally,
Sunil,
I
I,
would
I
have
would
asked you
like
to,
to
yes,
like to add one more point. This circular has come as recent as September, October, right?
right,
There may be existing litigations which might be going on.
yes,
So there might be a question in one's mind that this litigation pertains to, let's say, 22, 23 or 23, 24, whereas the circular has come now. And
yes.
what should we do under those circumstances if the litigations are still pending? So if the litigations are still pending, you can still rely on this circular because this circular is more of clarificatory in nature. It
Correct.
is
So it
not
applies retrospectively.
it is not invocation of a new law. that that is prospective in its implementation. The circular is giving you a clarificatory guideline. So that principle of law was always there.
Correct.
So in case you're fighting any litigation which is still pending, I would suggest that you can still take help of this circular and still fight cases. Mind you, this circular is binding on department. Na? It is a government issued circular and it is binding on department. They cannot say that we will not follow this.
Right, right.
So,
So this is going to be very helpful for all the existing litigations. This
thank you.
new circular and its clarification, we can definitely use it in our litigations. So we are almost at the end of the session, and we are open for any questions which is there for the from the audiences.
So what ICC is saying probably that they would compile all the questions and send it across to us, because only we can speak and the audience cannot join in as speakers. So probably they'll compile all the questions and send it to us, and then we can probably answer it across. So IC can send us the questions and we will definitely answer it across.
Sure. I'll just request Dr. Ghosh if he can.
I posted one question.
Yes, so we have one question here. GST has been waived for life and health insurance, but they pay GST. How do they balance? So this question is basically that recently, after the GST 2.0 implementation, the life and health insurance have been exempted from GST. However, they have been receiving a lot of inputs by way of their expenses. So what about their ITC accumulation? What are the options they have?
That is basically their cost. So this amendment was brought more from the effect of consumer benefit, that the whole insurance premium goes down for consumer. But in hindsight, if there is a cost to an insurance company by way of ITC accumulation or ITC not available as credit, definitely the premiums will get readjusted in due course. So the only balancing that they
So
do is
are
that
we really
they will.
expecting any premiums to go down?
So yes, to some extent it will go down 100%, but to the extent of cost that will now come as an additional burden to them because ITC is no longer available. So going forward, the premiums will be adjusted accordingly, where those costs will be passed on to the consumer. So that's how they will balance.
Right, right, right. So we expect premium to go down, but not really by 18%. There will be some inducements of cost there, the ITC which is not available to them. So there has to be a balance with both of them.
One more question on the topic you discussed. Can you give a live example?
Live example on what, sir?
On this sales tax of a certain and ITC, some commodity.
On
Can
discount.
this,
Okay, fair enough. Or I'll give you 3-4 examples on the same transaction. Let's say I'm manufacturer of kitchen appliances, and my one of my dealer distributor is, let's say, Vijay Sales or Chroma or for that matter Reliance Digital, anyone, and a consumer buys from there. Now, what will happen is, first is that I am supplying it to, let's say, Reliance Digital. I tell them, boss, that you are taking 100 pieces from me, but I will give you additional 5% discount if you take 500 pieces from me. It is absolutely possible with Reliance Digital that they can take 500 pieces from me because they will get additional 5%. Why will they take additional 500 pieces from me? For two reasons. One, they can be competitive with another MBOs if we take the bulk in terms of pricing. Second, they might have planning of coming of more stores in the country where they can place my product. So they would be more than willing to take such high volume. But in this particular transaction, it is only between me and Reliance Digital. Whatever they do with 5%, whether they pass it on to the consumer or they do not pass it on the consumer, is something which is not my concern. So this particular transaction, there are two options. I can issue a GST credit note or I can issue a commercial credit note. If I issue a GST credit note, they will take ITC after adjustment of GST. If I issue a commercial credit note, they will take full ITC. Situation number two. Reliance Digital says that normally the credit period is 30 days. Let's say if I give you payments within 7 days, how much additional discount can you offer? So I would say, okay, I will offer you a cash discount of 5%. So they pay me within 7 days and I reduce the liability by issuing a credit note of additional 5%. Under this circumstances also, it is only between me and Reliance Digital. Reliance Digital gets benefit of 5% by paying me early. It is not my concern whether they pass it on to the consumer or not. Come third case. Now, there is annual sale at Reliance Digital, let's say in January. And I know of the dates of annual sale, and I and Reliance Digital get into an agreement ki, okay, in your annual sale, you please offer 10% discount to consumer, and I will pass on that discount to you by way of credit note. This is an agreement we have entered. So in the big day sale, they announce 10% discount on all my products. Here, I'm inducing that supply by saying that you pass it on to the consumer and I will share that discount with you. In that case, whether my credit note or whether there is an invoice, there has to have a GST implication because there is a supply of inducement of sale for which the consideration is my credit note, my discount. So in that case, the consideration might be called by discount, incentive, or whatever name, but this is a separate supply, separate transaction where I'm giving it to my consumer through Reliance Digital. So that's a separate transaction. Similarly, if I ask Reliance Digital that you put up my brand's board in all your stores, and I will compensate you for all the space and all the branding that you've done on my store. So this is again, he is doing it on my behalf. He is spreading my brand to consumers by putting it in promiscuous places in its store. So whatever amount I will pay as compensation, that is subject to GST, and it is a different transaction. That credit note is different from the discounts, etc. So these are two different transactions, clearly bifurcated by one single understanding, ki whether two parties are involved, that is me and my dealer, or whether three parties are involved, me, my dealer, consumer. Once you establish that principle, I think you're sorted.
I have this additional question for you, Rohit sir. How should we decide whether it is a post GST discount or a commercial or a GST discount? I'm asking this from a supplier's perspective. For example, if I have announced a turnover based incentive in the festive season, for example, October to December, I have announced if you achieve certain targets, you're going to get an additional 5% of discount. So it is backed by an agreement. It is pre-decided at the time of supply. So whether that is covered under pre-GST discounts or a post-GST discounts.
So again, Sunana, the terminology pre-GST and post-GST is coined by us for commercial parlance.
Right.
The GST Act does not have any this coinage of pre-GST and post-GST. Like I said, GST has only three kinds of discount. One discount that you announce it at the time of invoice. The other discount is that you announce that you will give it on a future date, but you announced it at the time of supply. And
Yes.
third discount is where what you give post supply, which was not announced at the time of supply. Right?
So the
So
example
the
which I gave, yeah.
first question is uh, at the time of invoice, obviously you can adjust it in the invoice itself and GST will automatically be adjusted. The second is when you announce that, okay, conditional discount I'll give you if you complete
Achieve certain
500
targets.
quantity or 1000 quantity or you achieve the volume, then 15 3-week conditions will come in. There is an agreement. It is linked to certain invoices and recipient has to reduce its ITC. So 15(3)(b) will come in. Post GST, that is post my supply, if I give any discount, then there is no condition of 15(3)(b), and it is on my choice whether I'll issue a GST credit note or I'll issue a commercial credit.
Okay. So even if I announce it prior to the supply, I need to comply with three conditions. I have a document in place, but I have to link it to the relevant invoices. That is another
So
condition. And also
see
the
the
recipient must reverse it.
yes, so 15(3)(b) lays down this condition. However, relaxation is there with related to linking of invoices, and the condition of
Okay.
this agreement is also proposed to be done away with probably in this coming budget.
Right. Okay. So we have another live question.
Mhm.
Uh, Practical GST implication in cases where post-sale discounts are offered retrospectively by suppliers versus at the point of sale. From a compliance and accounting perspective, what are the key difference businesses should be aware of, and how can companies ensure that these transactions don't lead to discrepancies in their GST filings? Additionally, are there any
Okay.
strategic approaches that can help optimize tax liability while
Okay, so this is
right? So
what
basically,
precisely I answered. So at the point of sale, you adjust it in the invoice. You reduce the GST liability. You adjust it in the invoice. The recipient also takes the credit which is there in the invoice after adjustment. That is very clear. Now, post sale discount, which is given retrospectively, that for example, I have given you an offer ki bhai you take 500 quantities of goods from me and I'll give you additional 5%. 3 months down the line, you comply with that. You've taken 500. So now for all the 500 invoices, I'll give you 5%. Then I have to comply with section 15(3)(b) ka three conditions. If I comply with that, I will adjust it in the credit note. If not, then I will give you only the value of discount and without adjustment of credit. As simple as that. The strategic
so
approach only is
our
to have an
main
agreement.
correct. So our main mool mantra is on this that we comply with the conditions of 15(3)(b) or not. Accordingly, we issue a GST or a commercial credit note. That's the whole point.
So, Sunera, first we identify that out of the three conditions or three discounts, which is the discount I'm offering? Whether I'm offering at the time of
Right.
supply, whether I'm offering announcing it at the time of supply but offering it subject to fulfillment of conditions, or I'm offering it post supply. First one is on the invoice, second one is subject to conditions of 15(3)(b), the third one is could be a
Right.
GST credit note, could be a uh,
Commercial.
commercial credit.
Right.
Yeah, I
So
think
do
our
we have
time is
any other
already up.
questions? Yes. Um, I would request
Regularly,
Mr. Ghosh to just come in and close the ceremony.
Mr. Ghosh, we can't hear you. Yes, obviously, in reality, credit notes are being issued regularly because that is the only way of accounting treatment being done, GST RICO being done. Even IMS portal works on the issuance of debit notes and credit notes. So, yes, that is mandatory and it's actually being done in reality.
So we have another question.
So, the no compliance part is largely on two fronts. One is where there is a supply, but the dealer fails to recognize or the manufacturer fails to recognize that there is a three-way party involved: manufacturer, dealer, consumer. And in that case, the discounts or credit notes should mandatorily have GST adjustment is something which we miss out. That is one part. The second part of non-compliance existing today is where supplier has issued a GST credit note, but the recipient does not agree to adjust the GST credit note. It simply either rejects on IMS portal or keeps it pending or does not respond. That is where the supplier lands in a soup. These are the two major non-compliances happening today in the industry.
Thank you very much. Now we can, if any further questions come, we will send across to you. It was a very insightful program, and we can end now. Thank you, sir.
Sure. Thank
Thank
you.
you. Thank you, everyone. Thank you.
Thank you.